I think silver has got tremendous potential. It's much more volatile and people have to be careful. But now the risk, except for short-term volatility, the risk in silver is that you admit that you missed the boat rather than that you try to finesse it. Therefore, you should own silver now. You should have a good amount of silver. And it looks like it could hit $200 in the next, let's say, 3 to 9 months.
I expect in the next 6 months, and this is month one in the countdown. We're already close in November. We started, so December's month one. But in the next couple quarters after that November close, I think you'll see silver with sharp sell-offs in the process reach at least 200 and possibly a lot higher in a rampage. Yeah, there'll be a correction in the middle somewhere, probably.
Silver is entering a phase where volatility is no longer the main risk. The real danger now is hesitation. After years of underperformance, the metal is moving into a window where significant gains can happen quickly, punctuated by sharp but temporary pullbacks. Missing exposure at this stage could matter more than trying to time every correction, especially as momentum accelerates and market psychology shifts. Egon von Greyerz and Michaeloliver both frame silver as a late-cycle opportunity rather than a crowded trade. Based on long-term suppression and recent breakout structures, projections point toward triple-digit prices, with scenarios that see silver reaching the $200 level within the next few quarters. Even if sharp sell-offs occur along the way, those moves are viewed as part of a broader ramp rather than a trend reversal. The argument is simple. Silver's volatility works both ways, and in powerful bull phases, it tends to surprise to the upside far more than expected. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think we're now entering an era which is, as I have explained many times, is the end of a monetary era for the world as a whole, and especially the Western monetary system. And therefore, we are going to see an acceleration down in the currencies, in all money. And on the other side of that is, of course, precious metals. That reflects what's happening to the value of money. So therefore, obviously, precious metals is normally stable purchasing power, but now I think they will go up more than the purchasing power because there are massive shortages in the world and there is a lot of demand. I do not expect a correction at this point. Of course, there will be corrections on the way up to what I've said many times, multiples of the current levels. That is, both gold and silver will move up many times in relation to the price that they're at now. And I see this trend continuing for maybe up to 6 months before we have a proper correction. There'll be smaller corrections on the way, but the big one is not going to come until silver and gold have moved a lot higher. And just take silver first. I mean, I've recommended to have a bigger weighting of silver than we have recommended before, at least, say 30, even 35% of silver and the rest in gold. But I think silver has got tremendous potential. It's much more volatile and people have to be careful. But now the risk, except for short-term volatility, the risk in silver is that you admit that you missed the boat rather than that you try to finesse it. Therefore, you should own silver now. You should have a good amount of silver. And it looks like it could hit $200 in the next, let's say, 3 to 9 months. And so that's, we already gone quickly from 30, 40, 50 to 70 almost now. I think that will continue. So I would not be out of the metals at this point. I would not try, as I said, to finesse it. I would own silver and good amount of silver. And gold is not going to move up as fast as silver, but it's still going to move up. And therefore, we will see both in gold and silver major advances in the next few months, in my view. And then at some point, let's say in 6 months' time, I don't know exactly when, but there will be a correction. In silver, the correction will be big, but the long-term trend is still up. And it's very hard, as I said, to get out when it's reaches at what you think is a top and get in again, because I think it's probably safer for long-term wealth preservation investors. It's better to just hold on to it, ride through the correction, because you're going to see much higher levels after them. Just to explain, there are shortages of gold worldwide, and the 20% that Morgan Stanley has recommended to as an allocation to gold, which is total change from before. Before they actually didn't recommend any gold, and now all of a sudden gold and silver, precious metals. 20% is very high, and of course there is no chance for the world to fulfill that 20% allocation, because there isn't that much gold around, and because there's so much paper gold before that will ask for delivery, and they are not going to get delivery, and this is why we'll have the squeeze in gold, even more so for silver. So there will be a massive squeeze in silver also, and we could see panic days in silver in the next few months, and that's because of the massive paper silver outstanding as well as gold, but paper is a lot more. And the industrial of demand now in silver is 50%. It used to be 10% a few years ago. Now it's 50% of the total production, and the production is very small. There's a deficit of silver every year that has to be made up in the futures market or by borrowing and lending, etc. And therefore, it's a very interesting market now to own physical only. Do not own any paper whatsoever in gold or silver. Hold physical that you know that you have access to yourself. You're going to see a very interesting period ahead of us right now. So, David, this time I agree with you most of the time, but I don't. Of course, we can have a correction, but I expect this market to continue overbought for longer than everybody could ever imagine.
Well, what warned of that wasn't that silver's in an uptrend. It's been an uptrend for a couple of years. No big deal. It's the spread breakout when silver broke out relative to gold. The same thing happened back in 1979 during that rush in silver. It went from like the teens to $50 in 5 or 6 months. Okay. It's when the spread broke out, silver favoring over gold, that suddenly silver went rampant. And it both went up, but silver just left the page, okay? Same thing happened in 2010 during that already aged bull market in silver, been going up for years. There was a point at which its spread broke out versus gold, and in the next 7 months, silver doubled in a half. Boom, doubled in a half, very quickly. We argued when the spread broke out this time in November that process is now commencing here for silver. And if you go back and look at that copper I talked about, or the lead charts, when you entered that new search for a new reality, you did it so quickly. It was always a couple quarters. It's very amazing. And the same with 79 to 80. It was a couple quarters, like 5, 6 months. In the case of 10 to 11, it was 7 months from the spread breakout to the peak of silver at 50. I expect in the next 6 months, and this is month 1 in the countdown. We're already closing November. We started, so December's month 1. But in the next couple quarters after that November close, I think you'll see silver with sharp sell-offs in the process reach at least 200 and possibly a lot higher in a rampage. Yeah, there'll be a correction in the middle somewhere. Probably. There was in 1979, there was a little correction in the middle that fooled people. Same in 2010 to 11. There was a reversal month. There was a fake out, and you exploded more. So sometime, let's say mid to late first quarter, you might get a correction that you could really call a correction. And I think you'll see that it doesn't just get to what you could call a fair value based on the degradation in the money unit, meaning $200 an ounce or so, but probably overshoot it vastly. And plus, there's the other factor that we haven't talked about, and it's not just that silver's a key industrial metal; it's a monetary metal. And when certain other events outside of the monetary metals occur, like we have an underlying earthquake-type crisis building in some major government bonds, our bonds, Japanese bonds, UK, etc. There's a lot of big bond markets where there's underlying crisis already there. Just hasn't ripped open and exposed itself fully. And when that does, that'll create huge waves of doubt and panic and impacts on other markets like the stock market, down, etc. So all these factors can come into play, in which case the central banks go ape, absolutely crazy, trying to save their government bond markets. And therefore printing money, which is the lifeblood of what gold is. Gold is money. You destroy your paper, gold goes up, etc. So I think that's the real underlying major factor in play here, not just the silver supply demand.
The global monetary system is moving into its final phase, with accelerating currency debasement across the Western world. As fiat purchasing power erodes, Precious metals are no longer just preserving value, they are beginning to outperform it. Structural shortages, rising industrial demand, and relentless physical buying are pushing gold and silver into a new regime where corrections are brief and upside momentum dominates. Silver, in particular, is entering a historic squeeze. Annual supply deficits persist, industrial demand now absorbs roughly half of total production, and paper exposure far exceeds available physical inventory. These conditions have preceded explosive advances in past cycles. Momentum signals show silver breaking decisively against gold, a pattern that previously led to rapid multi-month surges. Levels near $200 are increasingly viewed as transitional rather than terminal, with overshoots likely as bond market stress and liquidity injections accelerate. Gold follows more steadily, but both metals are responding to the same force: the destruction of paper money credibility. Physical ownership remains critical as volatility intensifies and systemic risks rise. Let's get back to the interview.
Things that are going on in the process of silver going to a new reality. Gold's already, like I've said before, gold, each bull market well exceeds the prior high. Silver didn't, okay? And silver's changing that now. But gold's bull moves, for example, have been eightfold moves. Bear low to bull high, 1976 to 1980, eightfold. Eightfold, 8 times the bear low. 2001 low to 2011 high. Much different span of time, but an eightfold move. Okay, if we have an eightfold move, in other words, if we just do it again, have another routine eightfold move, would be $8,500 because our bear low was $1,050, okay, in 2015. So that's just getting back to normal in terms of having matched a prior bull market in terms of dimensionality. There's even bigger stuff going on this time than it was in 1980 or 2011. So we don't, I think 8,000 is just sort of, I throw the number out, not as a prediction, just saying, if it goes there, it's done it again, But we've got underlying stuff that we've not had before. In 2007, we had a mortgage crisis, meaning, mom and pop mortgages failed. Okay, not government bonds. All of a sudden now we got government bonds in trouble. And the Fed can cut rates all they want on the short end. It doesn't help the T-bonds. And the governor of the president of the New York Fed, I forget his name, Williams, I'm not sure, about a month ago made a statement, this is a press conference or a speech, but I'm sure it was permitted to be said, that the Fed is going to start buying, quote, buying bonds to help liquidity, was his excuse. Oh, not that there's a problem there. It's just the liquidity issue. Right, that's great. And he smiled. That's a statement that they're going to print money to save, the U.S. government debt market if they can. And if you look at the T-bonds, they're not an alternative to the stock market anymore. The 60-40 principle of 60% stock. It just doesn't work. In fact, one of the major banks came out with a statement a couple of months ago, said, no, it should be 60-20-20, gold being, it more likely should be 60% gold, 20-20. But anyway, the point is there's a recognition that, something's wrong with that alternative. And if you look at a T-bond chart, it's comatose. You can even have a bad week or so in the stock market and it just sits there. It's not an alternative. And if it flinches about 4 points below where it is right now, we're trading around 115 on the T-bond futures right now. You get down around 111, watch out, put your helmet on, because you could have a downside collapse that sparks the Federal Reserve into something drastic and sudden, hence fueling the monetary metals. Again, it's an essential metal for the future and the present in solar power, which is being in great demand, especially in underdeveloped countries that don't have a local power company, okay? You might have a cell phone, but you need some kind of solar panel in your backyard so you can power your house, etc. And therefore, that's the Chinese are selling that, around the world to a good audience, a large audience of people who need it. And that's a huge percent consumption of silver annually. Plus, then we have the high-tech stuff. It's everywhere in there. It's embedded. You can't shrug it off or replace it with something else. And that's the industrial side. But again, there's the monetary side. And people forget that, silver's the poor man's gold, and it's actually been money, and it could easily become money again. And even if it isn't actually recognized as official money. The average guy, when he gets hurt, especially if the stock market rolls over, and he suddenly doesn't have anything that looks good, and yet his neighbor down the street told him a couple of months ago, I'm buying silver bullion, and his neighbor suddenly doubled his money, and you say to yourself, oh, gee, I wish I'd done that. Maybe, and suddenly the average guy wants to own the poor man's gold again, and there's a rush there in demand. Those are the kind of factors that they're all underlying based on these broader fundamentals than these little technical events off to the side, which is great for conversations, but it's really not the driving force.
The world can't do without silver. As I said, the industrial use has gone from 10 to 50% in the last 5 years, and that's, as we all know, the solar cells, is car batteries, and car batteries are going to increase dramatically in production also. Samsung is coming out with a new battery now that can be charged in 10-12 minutes, and you can drive a car for, I think, almost 1,000 kilometers, 900 kilometers now on that battery. So that will most probably be in the future. There'll be more car batteries produced, more solar cells, and then of course the whole electronic industry needs silver. So the demand for silver will only go up. As I said, there's a massive shortage of silver, and silver prices will have to go up substantially to satisfy this demand, and still there'll be shortages. Sure, there will be downturn in the world, and in industries will suffer for a while. But at the same time, remember, silver will also be, silver is poor man's gold, although it's going to be soon worth a lot more or cost a lot more. And therefore, people will buy silver for investment purposes, for wealth protection purposes. I expect the silver price to be maintained for a very long time. But with, again, I point out, massive volatility. The ratio, it will certainly go down. It might stop at 30 for a while, maybe not for very long. And then I'm sure it'll be on its way to 15, which has been the historical average, and it's about, the production of gold and silver is about 15-1 also. That ratio is a credible ratio, but I could see it also going down to 10, for example, the ratio, because of the demand for silver. So yes, it will be, the next few years will be the era of silver, definitely. But again, I need to point it out, it will be a roller coaster ride, and you will have quite a few frightening corrections the other way. But you got to hold tight then.
The precious metals market is entering a fundamentally different phase, driven by forces far larger than short-term technical moves. Gold has already followed its historical pattern of delivering multi-fold bull markets, and a simple 8-fold move from the last major low points toward levels that merely repeat past cycles rather than signal an extreme outcome. This time, however, the backdrop is far more fragile, with government bond markets under strain and traditional portfolio hedges no longer functioning as expected. Silver is now catching up, both monetarily and industrially. Industrial demand has surged from roughly 10% to nearly half of annual usage, led by solar power, electric vehicles, advanced batteries, and high-tech electronics. At the same time, silver's role as a readily available form of monetary protection is returning, fueling investment demand alongside industrial shortages. Volatility will remain intense, but the long-term trajectory points toward a sustained repricing of silver in the years ahead. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.